Now, I'm super happy to actually announce a capital markets strategist, someone who is actually with the Belgrade Stock Exchange, someone very interesting, and he is going to be speaking about capital markets in a digital era. If you're ready, yes you are. Very happy and pleased to welcome on stage, put your hands together for Miroljub Ristić.
Yeah, thank you for
Wonderful that you're here. Please take it away. Yes, we can clap, absolutely.
Thank you for the great announcement.
Thank you for being here. Looking forward to this.
Yeah. Ladies and gentlemen, good afternoon. Thanks for having me here. As you have heard, my name is Miroljub Ristić, and I'm advisor at the Belgrade Stock Exchange, and I used to be Chief Operating Officer on that same trading venue for a long time. So right now, here in Split, in past 2 days, I have opportunity to talk with young people that are very positive about future, that are great community, that are very passionate about things that they done here in Cosmos. I see one great startup community here, so I think that on this presentation, will try to give you a story that startups in general very like, and that capital markets and financial markets really don't like and hate it. It's a failure stories. So before I start the story, please take on the right side of this slide, you can see the logo, the trademark of the Belgrade Stock Exchange. Actually, you cannot see it, you need to trust me. This is a part, it's blurry and in low resolution. And the same view that you had on this slide and this trademark of the Belgrade Stock Exchange is the view that institutional investors have when they look to the frontier markets. I came from the frontier markets. I came from Serbia, and when big funds and big institutional investors from the Western Europe, from the US, Middle East came to this part of the world, they also need some trust for their partners to tell them what is it. They need more clearer picture and clearer path. I will give you a story that is failure story, how we didn't make to build resilient and efficient capital markets. And that's maybe a story for this part of the world, and it's not applicable on the other part of the world. So, you know, guys from Berlin or guys from other innovation hubs in Dublin, I don't know, they don't have this kind of problems. But small and underdeveloped financial markets must deal with that problem daily. So the basic premise of the capital markets is access to finance. Access to finance means that you will move capital on the most efficient ways from the guys that have it to the guys that have good idea and that can give you the best returns. But if you impose frictions in that process, you will get a failure in the capital markets. You will get the problems that will never go ahead. Why? Because the markets, as Friedrich von Hayek said, are discovery engines. And markets, based on the information flow, produce prices as indication what should you do with your money, with your any kind of good that you have. When markets does not have information flow, and in the capital markets, that basic information is capital or liquidity, markets doesn't discover anything. Markets just daydream and hallucinate. That's in general, I want to hallucinate. So the whole idea of this presentation is about my ideas, what should be done to prevent markets from hallucinating. So when you don't have markets that could produce prices that tell you something, that tell you where you're gonna go invest and where you can go, where you're gonna get the best return on your investments, money will go from your market, and money will go on the markets that doing that the best. So we have really strange situation. Money in this part of the world, in Serbia, in Balkans, is needed more than in the Western Europe or developed markets. In theory and in practice, that money will give you better returns on this market, but the money is going abroad, even though the potential here is higher. But you don't have secondary markets, you have very, very tough regulatory requirements, and you have very complicated custody and clearing settlement procedures. The money will flow away from your domestic market, and also there will no money that will go inflow from the abroad. In that situation, you will have always the punchlines, you should invest in domestic economy, you should support founders from your country, but for the capital, this is not a patriotic thing. The capital is a more rational thing than anything that humans ever invented. So when you don't have a good infrastructure, when you don't have domestic demand and domestic access to capital, and you have very, very big frictions on every step of your investing process, you will get the brain drain. Your best founders will go to Berlin because the weather is better there. You have your founders go to Ireland, I don't know, wherever in the world, because they have access to finance there, they have cheap capital, and you will be left with nothing. Your gross domestic products will suffer, your liquidity will suffer, and you will get in the circle that you cannot break. In this part of the world, we did some attempts to change this picture. So it was, I don't know, at least 4 to 5 integration attempts between stock exchanges and markets in the Southeastern Europe. They get good names, T-Rex, regional exchange, something like that, C-Link. So we tried to be more appealed to the institutional investors. So if we don't have domestic capital base, we try to get capital from abroad. But we didn't make it. We didn't make it right, at least. Because, always is some politics that is included in that, because every regulator in every market has something to say about its market. It's totally different. We are doing best. We are doing this on this way, that on that way. But our approach is definitely the best. For the institutional investors, for the international investors, that is not approach that they want to hear. So we didn't manage to get whole package to appealing to investors. We somehow made things on the trading side, but trading side is really easy. I get money, you get assets, we can somehow discover the price between two of us. And we can make the trade between two of us. But when we want to settle that trade, we must employ a bunch of people to do it. So you need brokers, banks, KYC, AML, and all of that guys can make one comma as an error, and you have a whole reconciliation process that will take days to find what mistake was and what true price and what true process should be. To things make even worse, this part of the world did not consolidate, but the other parts of the world are consolidating rapidly. There is a significant push to the liquidity consolidation, and you have exchanges that are merging rapidly. Euronext, for example, in last 3 or 2 years, bought already Oslo, Milan, and Athens Stock Exchange. You will get in the nearest future more and more liquidity holes that will sink all possible liquidity from the small regional markets. So you will stay with even less capital that you have it now, and you will have the problem to finance your best companies that could really produce and bring you from the middle income gap country to the developed economy. So if we don't do anything, we will definitely always be client state of the big capital. In today's time, with this polarization in the world, that's not a good thing, definitely. Never is, but today especially. So there is this relatively new technology called crypto that could maybe change this game for the small, underdeveloped financial markets. Crypto is great as a culture, as you can always see when you are here in the France and chat. But tokenization, one part of the crypto, is the thing that make new market infrastructure. Tokenization can give us a vehicle that asset could bring rules within self. You will have the bond that could pay the coupon by design. You can have the instruments that can make prices better, truer, or even fairer than it's now. If the smart contracts could be smart enough, we could make smarter markets that could maybe, in nearest future, be competitive with the bigger markets. And I just wanted to, again, pinpoint what is the major problem in current situation. That's a settlement process, not trading process. If we can somehow manage to, through the tokenization, improve the settlement process and diminish the counterparty risk that is dominating right now these settlement processes, we can do something big. I came from Serbia, and this is my idea how the small capital market could do better in these times. So maybe we should propose to our government, maybe we should get an idea to make new settlement rails that will be governed by the Belgrade Stock Exchange, that will impose atomic delivery versus payment, and that will give us the power of the predictability and truly diminish the risk of being small capital markets. There was a call earlier, innovate or die. Maybe the new call for the new markets is tokenize or fall into the hole of the perpetual diminishing. Maybe this new technology as tokenization are the saving card for this part of the world, and something new could be rise from this idea. I just want to say that these ideas are not easy to implement. No, regulators are not just bad guys that want to prevent something. Nobody, I came from the regulation side also, nobody wants to be on media every day with some failed stories. But this is our chance to do things smarter if we cannot do things on the same level like big things that are done on the big stock exchange. Thank you. That was my presentation, my short story. Thank you.